What is up, everybody? Happy Saturday. Welcome back to another episode of Adam Bergman's Money Makers. Today, I want to talk about another small cap SPAC that might be primed for a major bull run. But again, the major bull run is not today. It's not tomorrow. It could not even be in the next year or two. I'm talking about when the society catches up to the technology that this company has. This company called Wejo, W-E-J-O, which stands for We Journey. It is a company that just went public through a SPAC merger on the stock exchange. It's actually backed up and invested into by Palantir. I believe is their second largest investment into a SPAC, could be their first. The other one, of course, is Lilium, which I made a video about last week. Wejo collects data points from cars. So what they're saying is it's just plug and play. That a lot of car manufacturers already have cars on the road that it's just plug and play. You don't need no modifications. I believe the number was like 200 to 300 million cars on the road already have this capability. And as they make new cars, there's going to be more and more such capability. They pay the cars in order to get near real-time data within 3 seconds latency, maximum 15 seconds. And they have these sensors on the windshield wipers, on the car, rear view mirrors, like everywhere on the car, outside lights, so on and so forth. And they collect data. When they first launched their SPAC, they had 11 million cars in partnership where they're collecting all this data as they're driving. Now I'm going to explain why this is important, and then I'm going to explain to you their growth. In comparison, they absolutely smoked Tesla, who's the second largest data accumulator on the road in the automotive field. That's right, they have more information than Tesla. The information that they collect can later be sold. This is the whole point of this company. For example, who would need this? A map company that's trying to give you traffic. For example, Waze or Google Maps. You see, their traffic is okay, but it's not right now. Their traffic relies on people to actually say, yeah, there's traffic or there's not traffic. It doesn't actually use sensors or it connects to your actual phone. Well, this is going to tell you real time based on the cars driving right now. Also, let's say people are driving. It can predict black ice, for example. It can predict when rain is about to happen. It can predict when snow is about to happen. You could also figure out driving patterns, time of the day patterns, location, demographics, so on and so forth. All this data then needs to be actually processed. Since Palantir is an investor in this SPAC, they obviously use Palantir Foundry to take all those millions and millions and millions of data points and to process them and to make sense of it, to take the raw data and present it into something that can be understood. Since they're using Palantir Foundry software, if you're a company and you're going to say, hey, I need this data for XYZ, they're not just going to give you the data. They will give you the process data of what you're already looking for, and sometimes even preemptively. Why? Because they are using Palantir's Foundry platform. And you guys all see the videos that I make about that and exactly how absolutely massive Palantir Foundry is. So now you can see why I invested in both of these SPACs. Now, Palantir does have over a dozen different SPACs. I didn't invest in all of them, nor am I going to invest in all of them. So far, these are the two SPACs that I believe Palantir's Foundry system can actually help these companies grow. And I can actually understand the connection of these companies with Palantir Foundry system, specifically Wejo's connectivity to Palantir Foundry. Now, last week they did have their financials. Their financials I want to go over right now. I'm not too concerned about the financials, and some of the main things that I'm concerned about is growth. Are they signing up more people to get sensors on their cars? That's the main thing that I'm looking for regarding these earnings. Before I go into earnings, I just want to give you guys the price. Currently sitting at $3.85. The earnings was not taken too great. It's negative 4.7% as of Friday. It was down like 16% at one point, so it did recover strongly. Couple things that I like to look at. Now, I understand it's not great when something's at a 52-week low, but if you're trying to get value out of a possible home run moon play, then this is what I like to see, near a 52-week low. As you can see, at some point, the price was $20. I'm not saying it's going to get back up there. I'm just saying Psychologically, it's good to look at something like this. This is what I want to see. The market cap is only $364 million. First thing I'm going to say is, Adam, do I think this company can get to $1 billion? Well, I'm trying to say that it's not difficult to get to $1 billion. I'm also trying to say that it's not difficult to get to $2 billion. $2 billion and less, in my opinion, is considered a small cap. $3 billion to $10 billion approximately is a mid cap. And there's different ways of, considering what you consider a mid cap. Maybe 20 billion to 100 billion is considered a large cap, and anything above 100 billion is considered a mega cap, or you can break it down even further. However, that's irrelevant. 365 million, that's a very good number for me to look at a project. All right, these are the highlights of the 2021 financials. The net revenue increased 92% to $2.6 million, which means that the money that came in, the revenue, was only $2.6 million, and that is essentially doubled from last year, which was probably around 1.4 million. Driven by a 29% increase in total monetizable vehicles on platforms to over 16 million vehicles. Okay, that's the main thing that I want to see. Growth of vehicles that they're able to sign up, because that's where the money's at. The more vehicles that you sign up, the more information you can gather from more locations and more territories. The more locations and territories you can get into, the more you can sell the data later on for specific use cases. Like I said, when they first launched the SPAC, I believe they had 10 or 11 million. I believe it's 11 million, which means that they grew to 16 million, which means that number is up 50% from their initial number. I like that. I want to see that growth. Eventually, I want to see this in the hundreds of millions, but this is good growth for me for now. I'm not too concerned about the money. I'm not too concerned what's coming in. I'm not too concerned what's coming out. I'm not concerned about that right now because this is a high growth company. I understand there's going to be massive, massive losses. I get that. As long as they're growing those vehicle numbers, that's what I'm looking for now at this particular stage. Combined with a 132% increase in customers. Much of the company's success was driven by the traffic management product line in Wejo Marketplace Data Solutions. In the fourth quarter, revenue growth was also supported by 2 significant Wejo software and cloud solutions contracts awarded, with most of the revenue from those contracts expected to be recognized in future periods. So we didn't actually recognize the revenue from those contracts. It's going to come later on. Also, a good sign for the future. Now, the problems. The net loss was $218 million. That's up 261%. So basically, whatever money or revenue we grew by, we also increased our losses by a larger number. But that's okay. It reflects higher expenses related to increased headcount, higher stock compensation expenses, increased cloud and development related expenses, increased marketing costs, and public company costs, along with transactions expense. Gross bookings increased 105% to $8.4 million, representing robust growth in new customers and growth in our base of recurring revenue for future products, for future periods. Gross billings increased 66% to $6.3 million and demonstrates the growth in cash generated from customer activity. Billing means that we're going to be billing customers later on. That means we have ongoing contracts, we have ongoing business. Annual recurring revenue, as at the end of 2020, increased 73%. Recurring revenue is very, very good, to $4.5 million, reflecting the shift in focus to subscription models for the company's products, as well as the expansion of relationships with existing customers. I like the fact that they have subscription models. That's very, very good. You can use it as you need it. Really, really good. Pay as you go. Total contract value, defined as new and existing contracts signed to date, increased 68% to $20,500,000. Again, a lot of these numbers I'm not too concerned about. My main number was that they now have 16 million cars in their roster, or 16 million cars that are able to produce this data from the sensors. Now what I'm looking for is this part right here, the key strategic priorities for 2022. It's basically a forward-moving statement of what they're trying to do. Before I do that, John Maxwell, who's the CFO, said, Wejo's ability to raise up to $100 million through a committed equity facility reflects confidence in Wejo's market-leading position and the ability to achieve its mission for the benefit of its customers. That means that there's going to be some dilution and somebody's going to be buying up shares. That's not good for the stock price. Expanding to new product lines in 2022, Wejo expects its traffic management product lineup to increase significantly and will be supplemented by the launch of up to 5 new product lines, including remote diagnostic services, audience and media measurement, end-to-end insurance, fleet management and roadside assistance, And these new product lines and the expansion of transaction management will increase the revenue per vehicle on the platform. Their land and expand with enterprise customers. Wejo is focused on targeting new enterprise customers and expanding relationships with existing enterprise customers. The company expects the large customers will be able to utilize Wejo's products and services across multiple parts of their businesses. Finally, creating solutions that accelerate EV/AV adoption. Wejo co-launched the EV Infrastructure Operating System to help facilitate EV adoption. We anticipated that Wejo's Neural Edge platform, also known as ADEPT, will enable vehicle-to-vehicle communications that are critical for the widespread deployment of autonomous vehicles. What they're trying to say is, kind of like Tesla reads things, they're going to help. They're going to allow cars to communicate in their system for those traffic conditions, as I said, who's where, what, this, that, is there any parking available, is there charging stations available, so on and so forth. Really, really cool stuff. Outlook for 2020. Vehicles on the platform expected to end 2022 with approximately 27 to 32 million vehicles. So that means that they can possibly double the amount of vehicles that they have now, 16 million to 32 million. That would be great. Now, if they fall beneath this and they don't hit 27 million, the stock price will tank. If they happen to get something like 35 million, the stock price will go high, very, very high, because they outpaced their prediction. They expect to generate net revenue of 10 million. Right now they're doing 2.5 million. Guys, I'm not going to read into this because all of this doesn't really mean anything for me. The main thing that I'm looking for is, are they growing their business? And I don't mean growing their business by contracts, which they're doing because they're trying to get into new markets. My main thing is, are they growing their core value, like their core mission statement? Like, what is the foundations of their business? The foundation of their business is to be able to have sensors on a car and being able to pick up the information from these sensors in near real time to their computers. And when they have that, they want to distribute that data in their entire network of whatever they're selling. That's all I care about right now. The price is super cheap. And can the price drop more? Yeah. Can this company fail? Absolutely. But at a valuation of around 300 million, I'm willing to take that chance. Like I said, it's very, very high. Anything can, raise this stock price like crazy. And that's what I'm looking for. Although I am going to hold this for a long-term hold, I wouldn't mind a nice spike in the price as well. Guys, thank you so much. If you want to buy this, the ticker symbol is literally WEJO. Definitely do your own research. None of this is financial advice. I'm just an entertainer and educator at best. If you like these type of reviews, hit me up with a comment and smash the like button.